Welcome to the Explainer. After a pretty brutal sell-off, the crypto market just snapped back in a huge way. So today, we're going to follow the money and see who exactly is buying this dip.
This is the number that changed everything. After 6 straight days of money just pouring out of the market, $240 million suddenly flooded right back into the spot Bitcoin ETFs. And this all happened in a single day. We're talking about a massive, massive reversal here.
So what's the deal? Was this just some random blip, a dead cat bounce, or is this the start of something much, much bigger? All right, let's dive into this, because what we're seeing behind the numbers, well, it's definitely not just noise.
Yeah, this wasn't your average investor panic buying. All the evidence is pointing to some of the biggest players in finance basically deciding, okay, the price has dropped far enough, it's time to buy.
And the first, clearest signal came right from the ETF market. That $240 million inflow we just saw, that wasn't just a tiny little green candle. It was a decisive U-turn, showing that institutional capital was confidently stepping back into the ring.
And it wasn't just the ETFs, not by a long shot. Around the same time, you've got major corporate players like Strategy out there raising another $715 million. And their stated goal? To buy even more Bitcoin. This is aggressive, strategic buying, plain and simple.
And this just perfectly shows how this trend is hitting even the most traditional corners of finance. We're now hearing that clients at top-tier banks like JP Morgan have been significantly upping their exposure to Bitcoin ETFs. The message could not be clearer. Wall Street is buying.
Now here's where the story gets really, really interesting. We have to look at what Wall Street was doing versus the mood of the average investor. Because while all this big money was moving in, everyday traders were feeling the complete opposite.
What you're looking at is a classic market contradiction. On one side, you've got the big institutions actively buying, raising hundreds of millions of dollars. And on the other side, widespread public fear and intense selling pressure. It's a textbook split in sentiment.
And here's the proof in the pudding. The Crypto Fear and Greed Index, which is basically a mood ring for the market, plunged to a value of just 20. That is deep, deep in the extreme fear category. We're talking about a level that often, historically, lines up with market bottoms.
And looking back, this exact kind of split is what analysts hunt for when they're trying to call a local floor in the market. It happens because institutions are playing a different game. They have longer time horizons. So when they see widespread fear, they don't see a warning sign. They see a discount. It's a classic transfer of assets from short-term weak hands to long-term strong hands.
So this new confidence in Bitcoin isn't just happening in a bubble. It acts like a giant green light for the rest of the market. And it's pouring fuel on some very specific altcoin trends as money starts rotating around with incredible speed.
And the results have been, well, explosive. As you can see, the money isn't just going everywhere, it's laser-focused on coins with strong, clear stories or narratives. The artificial intelligence story is absolutely dominating the conversation, with assets like FET posting just mind-boggling gains of over 40% in a single day.
We can really break this down into 3 powerful themes right now. First, the AI story is just red hot. Second, you have all this speculation building around which coins might be next in line to get their own ETF. And third, these big technical supply events, like halvings, that's when a coin's new supply gets automatically cut in half, are creating their own huge catalysts. These are the narratives you have to watch.
So, what does this all mean for the future? Let's zoom out for a second and look at the big macro trends that are driving this market, and also touch on the immediate risks you really need to be watching out for right now.
Okay, the most crucial long-term factor here is regulation, specifically around stablecoins. Now, these aren't the speculative assets you hear about. They're the fundamental plumbing of the entire digital economy. They are the rails that trillions of dollars move on.
So, getting clear rules of the road for stablecoins, like what's being proposed in some new legislation, is seen by many as a massive, massive catalyst. For big institutions, regulatory clarity isn't just a nice-to-have, it's a must-have. It removes that legal gray area and it paves the way for them to really integrate these digital dollars into global finance.
But let's be real, in the short term, this kind of crazy recovery brings extreme volatility. So the most crucial thing you can do is manage your risk. That means using stop losses to protect your capital, staying away from high leverage which can just amplify your losses, and really focusing your attention on the assets that have the strongest stories behind them.
And that really brings us to the key question. We are watching this fascinating collision, this convergence of institutional finance from Wall Street and exponential technology from Silicon Valley, both pouring into the very same asset class. Which one of those forces proves to be more powerful is what's going to define the next chapter for this market. Thanks for joining this explainer.